So in terms of what Dale asked, so I started in 2008, as I mentioned. I started trading stocks. Now, the reason I started trading stocks, by the way, is I put some money. Let's say, if you're looking at this chart, this is like sometime in 2007. So sometime in 2006, I put some money together and I gave it to a bank to invest in some mutual funds. And lo and behold, 2 years later, even though the market was doing this, my mutual fund was doing nothing. I think I had lost some money. So I said, you know what? If these guys lose money, I bet you I can do better. So that's how I kind of got interested in trading. And so 2008, around here, I felt confident enough that I know my support, resistance, read a couple books, all that sort of thing. And I said, well, I'm going to start trading. And then, of course, this was my trial by fire, because I started trading right in September 2008. And then, bam, the stock market took a tumble. Let's call it a tumble. And so my first foray into trading was actually terrible. Okay, just reading that. Okay, so my first foray into trading was a washout, to be honest with you guys. Immediately, it was extremely discouraging. And, didn't really, gave up on trading for a little bit, was kind of upset. And then I realized, well, you know what, this only comes once in a while. So I started trading again sometime in 2009, mid-2009. This tumble, and this is potash, but I mean, it was similar in many stocks. It taught me the importance of equity management, which I'll talk about later. So anyhow, then I got into Forex sometime in 2009 because I found currencies interesting, simpler, less of them. I can focus on them. And so then I started trading then. And in trading Forex, it took me, one thing I will point out here is if I see a live trade, I'm actually going to take it, which is interesting because this is the peso and it burned me. It burned me 2 days ago, which again, I will talk about in my presentation. But I actually intend to take a short somewhere around 1893. And so I may in the middle of presentation, sort of stop and take that live trade. And we can actually, by the end of the presentation, you should know why I did it. So anyway, I'll tell you guys what, if this comes to about 1893, I will likely be taking, let's see, about 1893 to 1895, I'll be taking that short intraday. And I guess this is going to be you guys' trial by fire. You'll be watching me start a live trade before the presentation. So anyhow, so that's a quick background. We'll get into this LAR presentation I prepared for you guys. Worked a lot on it. I really worked about 2 hours on it, 3 hours, to be honest. And we'll start with a risk disclosure. A lot of fun stuff, isn't it? So it's boring but necessary, and I'm not going to give you a really long risk disclosure. And Dale, if I need to stop or anything like that, just please chime in and tell me to stop because I can't see what people are writing. So this is mainly for the newer guys, obviously, newer guys and girls in the trading room. The truth is there's no all-encompassing statement to disclose every risk in the Forex trade chain, okay? Sorry, guys, give me a second. Well, this is it's getting interesting because in the middle of the presentation, I think I might end up taking a trade. We'll monitor that. Sorry. So what I was saying, there's no all-encompassing, statement to basically tell you to keep you safe in Forex, okay? The truth of the matter is there is a real risk of losing your entire account. It could be because of you, so you take a trade and you mess up, or it could be insolvency on your broker side, or it could be anywhere along the Forex trade chain. So from when you click execute on your platform all the way down to it actually being executed, you can lose your account. That's the truth of the matter. End of story. I just want you to know that. So if I show you something here, Just be careful. You're the captain of your own ship right here. Dale says it all the time, right? And finally, information I present here. This is how I understand the Forex market. I've kind of learned. I'll share my sources and how I did it. But just understand that. Like, this is my information that I'm presenting with you. If you disagree, that's fine. I'm just telling you what I do. So quickly, I'm hoping to present something that will be helpful to, the newer trader for sure, and maybe present some new information to pro traders. And at the very least, it could be interesting. Like, that's my intent. If you can at least walk away and say, well, that was interesting, I don't intend to come in here and teach Brooke and Ricardo and Dale or Anmol something. It's just, I hope you guys find something maybe a little interesting. All right, I'm just going to do a quick check, see if, oops, what happened there?
I don't recall, Mystic, sending you my family photo album, but you have a look of me as a Neanderthal on that evolution of a tree. Thank you, buddy.
You know what? Actually, there's a picture of you coming up. Hang on a second. Just looking at something here. No, we're not taking that trade just yet. All right, so let's continue back in it. So, speaking of Dale, picture of Dale. There's a picture of Dale trading, and in his mansion. I think this is in the Bahamas or something. He might have been a little younger there, but quick thing is, why are people attracted to trading Forex? And when I look back, I wanted to trade Forex. Well, first of all, I thought I was smarter than all these other people, right? And the market has a really good way of humbling you. But the main reason you're attracted to trading Forex is, money. You may dislike your current job. You want to set your hours, be your own boss. And let's face it, some of us think it's easy money or it's a lot of money. But in a nutshell, you're attracted to the lifestyle, right? But let's look at a quick sobering fact. And again, this is more for the newer traders, and it's just to make you understand the truth, the environment that you are in, and that there is in fact a way to do it right, okay? But if you go on forums, you'll see that there's these, people say facts. There's a large number of people who fail, right? 80-95% of retail traders fail, supposedly, okay? But I like facts. I like studies. I have a science background, so I like to get my hand on statistics, stuff like that. So French regulator AMF released the results of a study of French retail traders with French brokerages in Forex, okay? And they basically looked at over a 4-year period, and they found that the retail Forex failure rate in France was 89%, okay? So they basically got information from brokerages, no personal information. And of course, the definition of failure, you can go into the study and read it. I believe it was several quarters of losses. But this is the truth, okay? A large majority of retail traders do fail in the Forex market. There's a reason for that. And if you can avoid that, in my opinion, there's one main reason for it. And we'll talk about that. If you want to study, I can share this link with you after. And one other thing I want to present to you is that trading is not a natural endeavor. So most of us are taught to get a job, we obtain knowledge, a skill, and we exchange our time in applying that skill for money. And so we have a predictable income flow. We know that next week, most likely, we'll earn X amount of dollars, most likely. Okay, and in trading, your compensation is not predictable. I may work really hard in a trade and stock it forever and lose. On the other hand, I may open the platform, see a trade, it jumps out at me, I take it, quick money, right? So this is the truth. So is the uncertainty worth it? Is the risk worth it? And again, in my opinion, obviously, with where I am now, my answer is yes. Done correctly, you will make money. So one thing I'd like to present quickly is with my methods in trading, I like to keep it simple. Simplicity is the ultimate sophistication. That's by Leonardo da Vinci, okay? So I found that my effectiveness goes up with simplicity. So now I don't mean simplifying a concept and making it, I guess, way simpler than it needs to be. You don't need to do that. but keep it as simple as possible. So you don't need any unnecessary moving parts in a system, okay? So keep it to the simplest basic concept. And in my opinion, that will help us. I think the human brain has difficulty applying very difficult, convoluted concepts, okay? So for me, I like to kiss. I think all of us like to kiss. I like to keep it simple and stupid, okay? So, simple and stupid, very difficult for me to understand. Obviously, a huge exaggeration, ladies and gentlemen, but if, for me, I don't do this. My charts are usually very simple, as you've probably seen. They use simple price action. So I'm going to get into the 3 pillars of success in trading, in my opinion. Let me see if anything important has been said that I've missed. Sorry, what's that?
An LSD flashback on that chart that you showed.
Yes. That is Dale. That's Dale trying to take in all the information we present to him, all the looks we give to him in LAR while on LSD. So anyhow, I just want to show you guys one little thing. So I was talking about shorting the peso, and the truth of the matter is, did I enter? Okay, so I had 1/3 of a position at 92. So I wanted to see it end up at, was it 93 I said? I think it was around 93. So 1/3 of a position at 92, and I'm actually already out. Okay, so it's already hit my take profit. So just to point that out, that's a live trade that I only got filled 1/3 it looks like. Let me see. Yeah, sorry, 1/3. And I'll share actually what I did here. I have ample examples once we get into it. So let's get back to the presentation. Okay, so 3 pillars of success for me in trading. The first thing is, and this is what I think as a new trader you should kind of apply, in my opinion, since 2008 of trading. If I can boil it down, use this slide as a framework, okay, for your trading. Essentially, you want to come up with a logical trading concept, okay? So a logical trading concept, you want to understand, then of course you have to have a basic understanding of the Forex market as well. And based on that understanding, whatever you've read, whatever you like, the type of trading that you like to do, have a logical trading concept, which the underlying reasons for the price behavior you observe can be clearly explained, okay? So you want to understand what it is that you are doing, okay? Once you have a trading concept, so for example, if you like trading trend lines, if you like trading trend line breaks, you want to understand what it is that's happening with a trend line. Why does a trend line occur? Why does a trend line break? And I mean right down to why it really occurs. Like, why does a trend line form? What is actually happening in the market? So then you want to apply some parameters, right? So you want to clean up a bit. What currency pair do you like trading? Is there a time of day that there's a higher success rate? What about news? If it's close to news, will you trade? Is it NFP? Are you going to trade NFP? Do you like to apply some indicators, ADR, support resistance, overbought, oversold indicators like stochastics, RSI? What stop loss and take profit levels are appropriate? Sorry, do you guys hear that ding dong, by the way? That's, do you guys hear that? I don't see anybody saying they hear that, so okay, that's good. That's just indicators that I have telling me price levels that have been hit. Okay. Oh, you do hear it. Okay, sorry about that, guys. That's just, so what I have is on my chart, I have, I basically have indicators that tell me price levels that I wanted to hit are being hit, that's all, okay? So once you apply some parameters, okay, so you have a logical concept, you have some clear parameters, you will test it. You need a large sample size. You will back test it, you'll test it live, but you will test it, clean it up, Okay, so, with news, I should not trade during news. Okay, news does not affect me. The stop loss level that's required. Take profit levels that are appropriate. You now have a logical trading concept. Okay, it should be basically statistically proven, okay, before you even start trading live. Then you can start trading live a little bit. When I say a little bit, what I mean is I should actually clear that up. What I mean is proper equity management. My biggest step in becoming a professional, I guess, if I want to call myself a professional, but I bet you every single professional trader in the room will agree, the easiest and biggest step you will make in trading live is having proper equity management. So blowing an account, I have done this. I have done this twice. It is a terrible feeling. You lose money. Money comes and goes. But it kind of injures you. It injures your confidence. So you really do not want to blow an account, okay? Or if you do, you really want to learn the first time. It took me 2 times to learn. And the second time hurt even more than the first one. The first one I can claim ignorance. Shame on me for the first one and shame on me twice for the second one. But anyhow, I don't do it anymore. So that was a long time ago. You don't want to do this. So, I mean, what percentage of an account? I, in my opinion, say do not lose more than 2% per trade. Do not risk more than 2% per trade. The way I like to do it is basically once you have a statistically proven method and you have a stop loss, you know what your stop loss you require. So let's say you require an 80 pip stop loss for your method. Then figure out, based on your account size, what's the most you can lose. Let's say $20 is 2%, $50, whatever it is. So then apply it so that that stop loss is no more than $20 or $30 or whatever the case may be. That's how I do it, okay? I keep it simple, right? That's how I do it. The last part is psychology. So this is a huge topic. You got to read some books, but I'll try to boil it down to what, some important points that if I had to boil it down to 2 points is understand that you will take losses in trading. So you're not going to have a perfect trading method. There is no such thing. We all take losses. It will happen as long as you win more often than you lose. The second thing is never live trade outside a predetermined trade plan with proper equity management. Do not ever do that, okay? It will injure your psychology. Take it from me. I've done it. I bet you Dale has done it. I bet you some of the other traders have done it. Some probably have not, but this is bad. Do not do that. All right, so that's mostly for some of the newer people, I guess. I will try to, let me look at an update, see if there's anything here that I need to. Pros know how to lose like Mystic. Well, I've done it. Yep, losing that much sucks. Blowing an account sucks. Losing a little trade is nothing. Just to kind of explain that to you, if I, like when I lost this, when I'm, the peso trade that I had two days ago, I think. When that hit my stop loss, I was like, oh, hit my stop loss. Okay. What did I have to learn from it? Is there anything to learn? So my concept is win or learn. That's my psychology. So did I win? No. Then I better have something to learn. Did I learn something? Yep. I'll share it with you. And off I went. I went swimming. Then I went and went to my martial arts class. Then I went home. Nothing changed in my life. And off I went. Okay? So that's how it should be. You should not be having trouble sleeping at night. You should have no trouble sleeping at night, having a trade on. You should not worry at all, okay? It should literally be like that. If it fails, it fails. Too bad. No big deal. Get up and, do it again. All right, so I want to get into what I do. So 10-10. Okay, I'll try to get into this quickly. So I consider myself to be a price action trader, okay? And I look at price action to the core. My charts are usually clear like this. I may have a volume, like a tick volume chart down here, and that's probably all I'll have. You've probably noticed that on my charts. Some simple support resistance, that's all. Okay? And what I want to go over is how does price move? So we come up with projections and fibs and support resistance levels, and we project that what price will go from A to B, C to D, or whatever. ultimately, how does price move? And what I want to show you is when price is right here. So when I took this snapshot in time, 1142 was the price. This is what's called a level 2 or depth of market, whatever you want to call it, DOM. And what I'm showing you here is a Euro futures chart, okay? Now, one caveat, Euro futures trade on a centralized exchange, okay, the CME. The spot market is connected like a spider web of mini exchanges, you can think of it. It's decentralized, okay? The spot Forex market is decentralized, which is why if I share a chart, if you look at your current price from your broker, it might be off by half a pip or a little bit than another broker, okay? And that's just based on that broker's liquidity sources, okay? So, and again, I'm kind of trying to explain a little bit how the market works here. So if you have an ECM broker like I do, they are likely using a liquidity aggregator. So it is essentially, it organizes their liquidity, ignore that spelling mistake, from several different sources. Okay, so an ECN, an electronic communication network, will have liquidity from several different sources: banks, market makers, other ECNs, institutional clients. And if you want to get into the mechanics of this, I read a lot about this. Basically, what happens when you click execute, what actually happens all the way to when you exit your trade. But for now, I'm trying to keep it simple. So what I'm showing you here is a Euro futures chart, and I will show you another chart, several more charts later. But for now, assume this is a Euro spot chart, okay? And so here we have price at 111.42. But what does that mean? Like, what is happening? So if I click execute a trade here, what happens? What I want to show you is while the price is here, there is liquidity below and above the market, okay? And there's a certain amount of liquidity below and above the market. So 13 contracts at 1142, 84 contracts. So a contract is 100,000 base units, okay? 84 contracts at 1141, and so on and so forth, okay? And above the market, it's the same idea. So the market moves, so price moves up and down as a function of liquidity, okay? It moves toward the less liquid side of the market, okay? What happens is if I come in here and price, and again, this is a snapshot in time, okay? So this is at that instant, liquidity shifts. It doesn't just stay like this. You may come in, and liquidity here might be 68 contracts 1 second, the next second is 100 contracts, okay? But at 1142, at this snapshot in time, we're simplifying it, right? If I come in and I say, you know what, I'm going to sell 15 contracts of Euro futures at 1142. Well, there's only 13 contracts available. So assuming nobody else is selling at the same time, I'll get those 13 contracts at 1142. Now I have 3 more contracts, right? Well, price is going to tick down to 1141. And then it's going to take 3 more contracts from that. That's how price literally moves, okay? Over and over. So sometimes when you see you get slipped or you see some slippage occur, it's not your broker trying to screw you over. I'm not here to defend brokers. I'm just trying to explain to you that, in fact, what happens is your price fill is a function of liquidity, okay? So essentially, any price level that you see, there will be something like this above and below it, okay? So this depth of market that I'm sharing with you here is showing, it's from my Decoscopy account. I have an account with Dukas Copy, Decoscopy, whatever you want to call it. So below the bid, so it's showing you the bids, and this is in millions, okay? So it's 1.32 million base unit of, I don't remember, I think it was Loonie, okay? USD CAD. And so it's showing you what there is available below and what there is on the ask side, okay? So for a total of 82.5 million, up to this price level. All right, and that's what is what's available basically above and below your price. So going back to price action, And sorry if this gets convoluted, and I'm trying to keep it as simple as I can. But basically, what I look at is a period of consolidation like this. What you have here is volume stability. You might have two contracts come in, they get absorbed, right? It causes a small little price movement. 5 contracts come in, no problem. You might go from 12935 down to 12936 or something like that, right? You have a period of volume stability, a little bit up, a little bit down, a little bit up, a little bit down. So the market does this all the time. Consolidates, moves up, consolidates, moves down. Okay? And I would say about 70% of the time the market is consolidating in my studies, okay? So it goes up a little bit, goes down a little bit. The market can absorb these moves until a bid surge comes into the market. Some type of stimulus comes in. It might be news. It might not be news. It might be just some type of an entity in the market. Microsoft is, exchanging large amounts of USD for euro because they have a new, I don't know, they're building something, a new factory in Europe or something like that. And generally speaking, a large amount of flows start to come in one direction. That's the whole point here. And so we go from 2 contracts, 3 contracts at a time, 5 contracts at a time, small little price movements to a bid surge, which starts to consume liquidity. So all of a sudden we have, and this is an example, this is for illustration purposes only. This is not accurate numbers, okay? But all of a sudden you'll have 30 contracts come in. Well, that's going to consume a lot of these price levels, a lot of the liquidity that's being made available from whoever is making it available. And price will come up here. Take a break, another bid surge, 20, another bid surge, 50. And so you basically have this bid surge come in and reprice, okay, out of a consolidation and creating what I like to call weak legs, okay, in the market. So this here was the last point of basically volume equilibrium, okay? And on the bid side, so let's say the bid side, so from here down, you can think of it from this green line down, all of a sudden, a huge order comes in, consumes vast amounts of liquidity from the ask side, okay? So price gets up here, and now the bid surge is over. So whoever came in and whatever entity or entities came into the market for whatever reason, and now they are done buying, okay? So now we're back to 2s and 3s. Well, what happens here is you have this liquidity void down here between the last level of liquidity down here and where liquidity was consumed. So all else being equal, price will drop. And it's not going to drop on sellers. It will simply exhaust and seek a last level of liquidity. So the surge exhaustion, price is done, will simply seek liquidity. Okay? This was the last level of good volume liquidity. Price will typically come back down and seek this level. Okay? This is the anatomy of a price move. I call this a fractal. The market goes through this on multiple time frames over and over. I'm just going to see if I'm missing anything important here. Okay, so looks like there's several questions. Okay, so how about I go through the questions at the end. I'm just going to continue through this. I'm going to continue through my presentation. I don't know how much time we have, 10:20 a.m. my time, so maybe 10, 15 more minutes, Dale. I'll try to do this as quick as I can, I guess. And then what I'll do is if you guys have questions, I can basically start.
We can run over. You can just take your time.
I can take my time.
We could hang out with you.
Okay.
Worth it.
Okay.
Yeah, go ahead.
Okay, so I'll go through this, and then at the end, what I'll do is I'll read through all your questions because I'm not ignoring you guys. It's just when I'm doing this, I actually cannot see your questions. I cannot see what questions you guys are writing down there, so I'll go through it at the end. So if you guys want, and maybe write down your questions on a piece of paper or something like that, and I will definitely. Sorry, what's that?
Hold back your questions until he's complete. Thank you.
Yeah, and I have no problem answering those questions. I have nothing planned till about noon today. And so I can definitely answer any of those questions that you guys have to the best of my ability. So And this is what I'm putting down here. This consistent price behavior will repeat on multiple time frames. I call it a fractal. I'm not the first person to, this is not me coming up with this. I did not invent this, guys. This is not me coming up with this. I did not invent this, guys. This fractal. It's just basically a repetition on multiple time frames as this applies to trading. Okay, so that's what I mean when I use the word fractal. This exact thing will occur over and over. Okay, I am going to give you some live examples. Yep, okay, some live examples. So some live examples, and I've broken it down to the 1 minute, and we will zoom out all the way to the daily after. So if I can have your attention to the chart on the right, this is your dollar franc, okay? And what you have is a 1 minute chart. This is from my from one of my spot brokers, this feed over here on the right. So what I have here, just to explain to you, I have NinjaTrader is the software that I use. And even though I have two charts, both from the same software, the data feed here is actually from the CME, and the data feed here is actually from a Forex ECN broker in the spot market. And so what you have here is the exact same move happening. The reason this is inverse is because with futures, they are it's the actual franc versus the dollar first, whereas here it's the dollar versus the franc. So it's exactly the same move happening. It's just a mirror move. What I want to bring your attention to here is you essentially have a period, and you can't see it all here, but a period of basically price stability. Okay, a couple contracts come into the downside, couple upside, couple down, couple up, couple down, couple up. Same thing here. Some down, up, a little bit down, up. You have volume stability. Okay, volume stability phase. Some type of stimulus comes in. It causes price to move, and I call these moves spikes. So that's the verbiage I will use from now on. Price will spike relative to this volume stability. So everything's relative, right? So it starts to spike, pop, takes a little bit of a break there, pop, a little bit of a break there, pop, and then it starts coming back down. So I'm going to go back to the first chart. I was talking about using volume here, right? So you'll have huge volume basically come in. You have bid surge come in. In the Forex market, again, due to the fact that it's decentralized, you don't have exact volumes. So this here is a volume chart. Sorry, this here is a volume graph. It's tick volume, so how many times price changes. As you can see, it doesn't do a good job displaying the volume coming in, the amount of volume coming in. You can see there's definitely more tick volume. Tick volume basically represents price changes that occur. Okay, so it's definitely higher than here. But what I want to show you in particular is that it does not do it justice. What is actually happening, if you want to look at difference in volume, is here the volume just prior to the surge, on average, so this is my average line, was 28 contracts per minute. Okay, and again, we're using a minute chart, so this is very narrowed in, zoomed in, and I do zoom in when I take these type of trades. It depends on the method that I'm using, but anyway, we'll get into my method later. But what you have is it was 28 contracts per minute, and now all of a sudden you have a bid surge or a sell surge in this case, and price starts to drop quickly. That's not happening on no volume. It's happening on huge volume, and what I want to show you here is that it peaks at 560 contracts in this 1 minute. So almost 20-fold the average is the type of volume that goes through. Okay, and so this brings us to this stage. Okay, price essentially peaks on huge volume. There's a price rebalance. Volume starts to go down. And now what? Well, the last level of liquidity on this side of the market is over here. And so price, I'm going to flip back to this chart. price will basically start seeking out an area of liquidity. Because what happens here is, as buyers come in again, there is liquidity on this side. However, as sellers come in, the market leaves a bit of a liquidity void. Okay, volume needs to catch up. Volume liquidity needs to catch up. And so as sellers come in, you'll see larger moves back down to the base of this spike. Okay, so this is a demonstration of the actual volumes that go through. So another example. So what I'm going to do now is I'm going to go through multiple time frames. This is a 2-minute. I will then go to I think a 5-minute, then an hour, and so on and so forth. So again, same thing. I'm just showing you the exact same fractal. Okay, and so that's my point here. I want to show you this fractal over and over. Area of price stability. Some type of stimulus comes in, causes the market to surge. Here's an offer surge occurring. So it pops down, seeks the base of that liquidity. Another surge comes in. This is the last liquidity zone. It seeks that area of liquidity. And as you see, when it gets to that area of liquidity, essentially sometimes it will hit a wall. And so part of my trading is actually I will buy here and then I will try to sell here sometimes. But we'll talk about this later. But it's the same fractal, okay? 5-minute, euro dollar, okay? Volume stability, up, down, up, down. Now, so we're on the 5-minute chart. Some type of bid surge will come in, causing a price spike, seeks out last area of liquidity, finds some liquidity there, drops again, finds some liquidity here, right? And consolidates again. All right, it's the same thing. And what price is dropping on is an exhaustion. It's exhausting. There's no more buyers coming in. As it seeks liquidity, price drops, okay? I didn't want you guys to say, well, you cherry-picked charts, so I just took the pound chart yesterday. This was, well, what time was this? Yesterday. And I just said, hey, let's just look at what's happening right now. All right, and so price will consolidate. It will spike, seek this is a point of break. I call this a point of breakout here. Point of release is down here. So anyway, seek out, come here, touch, and go. Consolidate, pop on off. At a later time, it will touch and go. Consolidate, pop, come right back down. So a lot of people see these as a sign of strength. Hang on, let me just check that everything is still fine. All right. All right, nothing important going on. Great. Okay. So, and come right back down. And of course, there's one here, which I didn't mention. But price will do this over and over. Consolidate, pop, exhaust right back down. Okay. You even see it occur on the daily market. So right here's a consolidation, pop on down, and eventually fill this liquidity void. Okay. Same thing here. Pop, come back down. Consolidate, pop on, come back down, consolidate. You see this over and over, all right? Over and over, you will see this sort of price behavior in the market. Some live examples, I called in LAR. So I typically use this on up to the 60-minute chart is where I like to use this for my intraday trading. And so these are some live examples. I just picked a few that I've done recently. How many did I pick? I don't remember. We'll see. But this was the peso on August 17. Price essentially was consolidating right here, as you see on the 60-minute chart. Consolidated up till here. And then a bid surge of some sort came in. Now, this could be scary. It's akin to basically jumping in front of a train. Okay? So, of course, I have a disclaimer at the end. Study this a lot if you want to use it. But once you get the hang of it, once you truly understand price behavior, I find this to be, honestly, my easiest trading method and my most lucrative, and the one that actually has the highest success rate. So what I see here, and of course, there's parameters. I guess I should maybe explain this a bit. So this was the price behavior. Right here, that's the price behavior, that's the fractal. However, there are parameters that I use, which I have basically developed over years and years of burning my eyes, sitting in front of the computer, and just looking at charts till I'm sick in the stomach. And so I have parameters that allow me, where I basically decide, allow me to decide where is it that price has truly exhausted and where to enter. And if I'm wrong, where it is to decide that I'm wrong. Okay, so it goes back to this slide. I've done this part here for years. Okay, I started with the concept, developed it, started live, and continued being a student in the market. I'm still a student in the market today. So back to some live examples. What happened here is a bid surge came in, took a little bit of a break here, popped on up. I think these trades are on Twitter as well, if you guys follow my Twitter. So I took this trade somewhere up here. I don't remember an exact price, but what I look for is it fails, it does a retest, and so I entered probably somewhere around here. It went for a little bit of a fake out, but look at the way it drops. All right, the way it seeks liquidity is bam. So once it comes back to any of these areas of consolidation, I take a position off, I take a part off, I take a partial profit, I then look for this level, and of course I set my stop loss to break even very quickly. So what I initially have is a containing stop loss, a larger stop loss. Once price exhausts, I adjust my stop loss to just below. So let's say I entered here, my stop loss will go here. Okay, and I just basically let it play out. Another example, so this was my last successful example that I called before my Mexico failed trade. So right up here, also I think I shorted right up here. I think it was 63, I think was a number. So anyway, at 63, I shorted, and once price came back to here, adjusted my stop loss, and I think I took out the majority of it out here. I think that's where I took the majority of it out. Okay, but the same sort of thing. Price stability, bid surge, exhaustion, and I trade it. That's simple. I stand right in front of it. I take it. Okay. When does this price behavior break down? So this price behavior tends to break down during fundamental shifts, okay? So you can have strong, sustained price moves occur on fundamental shifts, okay? So if you are trading, you have to understand the market profile you're trading, okay? If the market profile is such that there is an expectation, for example, of an interest rate hike, so the whole market is watching for an interest rate hike. We are in that market profile currently right now. You need to be careful. You may need to reduce price size, you may need to position size, you may need to adjust it, or you may need to stay out altogether. A little bit of a beware. Do not start trading this price behavior live right away. I don't expect any of you to do that, but if you are interested and this is something that you start looking into and it works once or twice or three times, and you start trading it live, you will likely get burnt. You really need to establish your own parameters, study, and if you want to ask me questions, I have no problem sharing more information with you. So I'm going to give you a live example of a failed trade I had and what I learned from it. I'm not sure if you guys recall this. August 30th, my Mexican peso trade. So what we had here was I called a short at 1871, I think it was. Dale, you recall this, right? Okay, hang on. Something is going nutty in the market. Sorry, guys. 1 second.
Go ahead, buddy.
Let me see. 1 second. All right. So you guys are looking at my master view. This is how I look at sort of everything. And okay, so my Mexican peso trade is completely out. Okay, so that was a live trade, and we'll talk about that live trade at the end too if you guys want. Yep, completely out. All right, so that's good. Back to the presentation. Oops. So when does price behavior break down? So essentially, I'm going to build a background. So here we had an area of price stability. It started to spike. Little spike here, remained unfilled. Little spike here, a little bit of a consolidation, spiked into 1871. I have several reasons why where I look at price eventually end. Those are some of the parameters. I can get into them. I need, I think, a presentation on its own to kind of discuss that. But for now, I entered here. Okay, so there's no shame in losing, guys. And ladies and gentlemen, there's no shame in losing. You will lose. You just get back up and on you go. You lose. I think I lost. This hit my full stop loss, which for my method is quite rare. I lost a full 2% on this. It's quite rare. Usually if I see that price continues on up, I will exit on a pullback and not look to take profit. This one hit my full stop loss. Okay. It was a 65 pip stop, 62 pip stop loss is what it will hit. Okay. So I entered here looking at the hour chart, roughly around here on this blue line. It went straight up. Okay. So boom, it kicked me out. I was a little bit upset myself, and by a little bit, I mean very, very, very little. Okay, very little upset at myself. And why very little is because really my equity management will save me when I make a mistake or if I'm wrong. What I don't like and why I was a little bit upset and why I did learn something, so I did not win. So don't forget my concept. It's win or learn. I did not win, so I should learn something from this. And what I learned was, again, the market profile we're in. So over here on this move is when Yellen started jawboning, right? So Yellen started talking about we are, she's starting to see the right conditions for a possible rate hike, all that sort of stuff. Boom. This is not the right time in a profile where I've noticed in my in my time trading, it's not the right time to trade when shortly or before something like this, shortly before or after something like this, when you don't know what's going to happen here, but you know Yellen is about to talk about something and she's going to talk about interest rate hikes. So I know from experience, this is not a good time to trade. So when I saw this, I had one eye on this and I said, damn, should I take this trade? Should I be taking this trade or should I not? But I was riding a 9-win streak, and I said, well, you know what? I feel invincible. I'm kind of exaggerating here, guys, but really, I took it, right? I took the trade, and I shouldn't have taken the trade. And so I'm a little bit upset at myself for taking that trade. And but, that's how it goes, right? Mistake, 2% loss, live and learn. On we go, okay? So that's what happened with this loss. Okay, there's no shame in sharing your losses. You should be ashamed of yourself if this knocks you out of trading. So if you lose 50% of your account, shame on you. Okay, that's when you should feel ashamed. The reason is, again, equity management is the easiest way to become a pro, and it's the easiest thing to implement. It's the easiest, simplest thing to implement in your trading. Okay, so I can take 10 of these losses, which I think the largest losing streak this year I've had was a 3 losing streak, 3 losses in a row. And so that's the largest losing streak I've had. The largest win streak was in August, which is weird because I don't usually do that in August. It was 9. But it doesn't matter. The only thing that matters is in terms of trading is, again, I go back to that slide. You have a trading concept. You have equity management. Something like this happens. You take a loss. No big deal. You should never be afraid of taking a loss. That's one thing I want. I keep harping on this because it's such an important thing. Taking a loss should be nothing. It should be no big deal. It should be just, okay, it's the cost of doing business. You take losses sometimes. On you go. Learn something from it and move on. So I think that's it. Some acknowledgements. So again, I've been at this for about 9 years, I guess. Many illegitimate gurus I've come across. I point this out. There are many, many illegitimate gurus that I followed or watched, and um, the main thing I have to say about this is basically right now, when I just presented what I presented, go out on your own and validate it. Do not take my word for it. I know you guys think I'm a very nice guy, I'm sure. Nathan Motti from Toronto is a great, nice guy. He's friends with Dale. But you don't take my word for it. You go and you validate what I'm saying. Is it real? Have I cherry-picked examples? Does it work for you? It may not work for you. This may not be your method. This may not work for you. So this might be just a nice to know, and that's all it is. But who I'd like to thank for this is Chris Laurie, another fellow Canadian trader, in my opinion, one of the pioneers of Forex. He does not know me. I've only emailed him before when I finally did become successful. I watched his free stuff, and from that I extrapolated and went on my own. And so I want to acknowledge that. That's where a lot of my learning came from. But he doesn't even know about me. But I find him to be amazing. Many talented traders in LAR. If I was a new trader and I had access to a trading room like this that is honest, and this is my opinion, you have honest guys. Dale keeps everybody honest. I think I would have learned a lot faster. So for all the newer traders, what you have found in LAR will let you go through a lot less pain, okay? And trust me, you will talk to any of the traders who've been at it for a while, who have been washed out or have not been washed out but are still at it. They will tell you about pain. I'm sure when I say this, all the traders who have been at it for a while will acknowledge that they've gone through their growing pains. And I can tell you all about my journey. I have no problems about that. And finally, of course, acknowledge Dale. Dale obviously makes trade calls, but what I want to acknowledge him for mainly is his moderation. You guys have no idea how many trading rooms I've gone to, or maybe some of the pros know, and none are moderated like LAR, right? Where you have a positive learning environment as opposed to the knives come out and people are calling each other out, and it basically comes down to an ego measuring room. It's not positive. It's not good for you. There's a room for all of us to make money in the Forex market. That's the truth. And in my opinion, if you follow that chart, this slide here that I shared, you follow you follow this and go through your own sort of journey, you will become successful, okay? Don't measure yourself against other traders. So I will not measure myself against other traders. I don't want you to measure yourself against me. I have winning streaks that will be amazing, and then sometimes I'm flat for a week or two. So I think that's all I got to say for now. Okay, I can share this. Again, this is my live trade that occurred today. So I do I take partial trades in as price moves towards my entry. Period. And again, by now you guys I should be able to ask you what happened, but you have an area of price equilibrium. Okay, volume stability, everything is nice. Then we have a spike. Okay, we have a price spike, huge amounts of volume starts to come into the market, holds here for a little bit. My target starts at 92. I can go and look at it, but 92. Yeah, 92. Yeah, so I missed my 93 entry. That sucks. Okay, so 92, 93, and finally a third at 94. My stop loss was also 60 pips on this, somewhere up here. So what happened with this one is, and I went partial, and once this area is broken, the other partial trades get canceled. My stop loss goes in right here, and any partial trade I do have on gets partialed out itself. So some profit was taken somewhere in here. I can go look at exact levels, but some profit gets taken in here, some profit in here. I had some to come out in here, but it did not go there. It came and hit my stop loss. So I took a 1/3 position in, and 2/3 of that position that I got in went to profit, and 1/3 went to break even. And that's what happened with my live trade today. So that's it. I think that's all I got to share with you guys today. I think that's all I got to share with you guys today. I hope that was interesting.
Perhaps there are a couple of questions that you could field. This has been recorded, and Mo clicked on the recording. I forgot to do it. So it's going to be there for you guys to watch again. Also, I'd like to acknowledge it's not easy to present and trade at the same time. Taking heat and concentrating on the community and presenting your trading methodology is not an easy task. Again, congratulations on being able to do that. Nathan, most cannot. Most can do one or the other, not both at the same time. So thanks again for sharing your journey with us, and a lot of great insights and methods. And everyone thank Mystic for sharing what cost him blood, sweat, and tears and capital to be where he's at now. Thank you, buddy.
No problem. Do you want me to take some questions right now, or do you want me to end my, I guess, portion of the, should I stop screen sharing?
Well, you may want to leave it up in case you need it for a question. This is recorded, yes. Brooke, are you still here? You have a question for Mystic? Any questions? We got a little bit of time. He's got to leave shortly. Go ahead. Fire away.
Yeah, if you guys want to ask some questions, I can definitely pull up some live charts here. We can, I don't know, maybe go through the market together or something like that. Or if you want me to clarify something, I have some time. Do you know the direction of the contracts? I mean, short or long? I don't exactly know what you mean by that, Brooke. So basically, when I say contracts, what I'm talking about, so on the, when I trade futures, you cannot trade micro or mini lots or anything like that, okay? So when you trade futures, I think actually now you could start trading micro. Maybe I'm wrong. But basically, you can only trade a lot, a single lot, a contract. So CME, let's look at it. Okay, so if you go here on the CME group, and basically you can look at FX. So basically, when you look at this, you can only trade lots at a time. I think they may have introduced micros in some things. So here, for example, when I say contract, I mean a single. I'm talking about when I'm showing liquidity, I'm showing how many contracts of liquidity there was available. That's what I'm talking about. I hope that kind of explains that. Does that make sense, Bruce?
Questions? Okay. Jesse, you have one? Peter, you have one?
Good.
There's a good one.
Your blue line is based on your own support resistance or volume profile. Okay, so let's see. You're talking about this here, right? Jess? Let me. Is that the blue line? Because Jess, if you're talking about this, or actually, I guess you're probably talking about this chart here, where I came up with these blue lines. Is this, if these blue lines are what you're talking about? Yes. What I'm doing is really I'm measuring the move. Is what I'm doing. Okay, so I'm kind of measuring the move. So I'm looking, and again, I'm applying several different concepts in the actual trading, several different parameters. Part of it is, if you look at the size of this move, excuse me, so once price starts to spike up here, you'll find that often they are roughly equal, Okay, so I'm measuring the move is what I'm doing. I'm using that as a measurement tool, really, is all it is. And my battery is running low. All right, we can take a couple more questions, I guess. Yeah, so it's actually a measurement tool, Jess, is what it is.
That's it.
All right, anybody else got any questions? Looks like Ricardo's sharing some important
Thank you so much, Mystic.
SPX stuff.
I'm grateful to have gotten to know you. Grateful for all your contributions to our community, and what a culmination of it with you presenting today. So thank you so much for sharing your expertise with us, buddy, and all you do for our community every time you're here. So I'd also thank you, partner.
Thanks, guys. All right. If you guys want to ask me any more questions, just direct message me on Twitter. I guess that's probably the best way. And if you guys have more questions for later. So I'll stop screen sharing now. Thank you for listening to me yap here for whatever it's been, almost an hour. I hope my journey was a little bit useful to you guys. And
great insights, Mystic.
Catch you guys tomorrow.
And congratulate Khalid on his short Dow that scored again today. The gambler's pretty hot lately. Matham, of course, thanks for this great presentation. Amal, Albert, thank you. Bernie, Brooke, BW, Craig, David Hodgson, David Shisha. Hope you enjoyed your time in here with us today. Thank you, Dennis. Gulzar, hope you enjoyed your first day with us. James, Jess, Andres, great goal call from today. Jess, great goal call from today. Neil, thank you very much. Peter, welcome to our community. Ricardo, as always, thank you so much for your shares and all you do for our community. And Armand, thank you as well. Again, I will be here for the NFP. We'll open a few minutes before the release. So in the meantime, definitely the euro we had staked out. We had it staked out all week. It took till today. We were talking 112, 112.50 for the number tomorrow. To me, it's a roulette bet. But we talked about these divergences in euro. It took some time for it to manifest, but manifesting in a pretty big way today. So I don't think any of us got caught long the dollar, because we were talking about it all week from this low and then this low yesterday. Never took out the reversal candle. Nice call, Larians. I think Alien was part of it. A lot of people agreed. How many people are still long the euro? How many people are still long the euro? I think Brooke is. You want me to turn my mic up? Okay. I can do that. There we go. Is that better? So I don't think there were many people in our community that were fooled about being too bullish a dollar coming into this week. So congratulations, everyone, on your great calls, and thank you very much. And I just want to thank Mystic again. If anyone else is interested in sharing their work with our community, like Jess has done so far, and Mystic being number 2, yes, we're going to maybe break down here, Rick. Something else I wanted to mention, that last week, broken clock is right twice a day. I recommended shorts at 21.89. Then had BE stops that were not elected, so you still have half positions on if you took that S&P trade, and you're up 29 handles. Leave the stop there, and let's see where it goes.